Hello, everybody. This is Joel Medina. Let's start with the weekly recap. We had an amazing week. Not only we had an amazing did we have an amazing week, but also pretty much everything that we were expecting happened with a lot of precision. But still, I want to always keep my feet on the ground, knowing that this is just all probabilities based. And the fact that everything that we projected happened doesn't mean that it will always be like that. Okay, so always remain humble with the market because there are no certainties, only probabilities. And if you get cocky with the market, and you don't become humble, the market always finds a way to humble yourself. So just keep that in mind. So let's start where we left off. Last week we said we were here. It was the 27th. You can rewatch the weekly recap or the last part of the video if you want of the weekly recap so that you notice that absolutely everything we just projected and that we're expecting based on the probabilities of it happening, it just happened, right? So that's a good news. We When we started last week, I mentioned this. You can, like I said, you can rewatch the video. Gonna make sure that I put like a card here in the screen where you can tap it if you want to rewatch, kind of like to see the whole analysis. But I mentioned the quick version of it is I mentioned that this is what I call the intention wick, literally. Um, when you see a wick, I explained the whole concept, but this is something I came up with, right? For myself, for me to understand the market. When you have a bullish wick, bullish candle that breaks so far away all the other previous levels, and when the levels are especially strong, this is what I call an intention wick. Okay, so literally that's what happened. So I also mentioned in the previous video that there was a really high probability that we were gonna feel the wick, and not only feel it but break it, right? And um, when you start if you start rewatching the previous video, you're gonna notice that I had this drawn up. Okay, I had this trend line drawn up, and I mentioned the fact that even though this was a bearish 4 hour structure, that from here I was expecting a gap up as we open because of the situation with Russia, that by the way hasn't changed that much. It's actually maybe getting worse. So as tensions rise with Russia, we could still expect a lot of bullish pressure on gold. So as we opened the market, as I was speaking, the market hadn't opened yet, and you're gonna notice that the market actually did the gap up. It was actually even higher than I was expecting. But I did mention that I was expecting another visit to this level here. There's a zone here on the lower time frame, let's say 4 hour, and I was expecting the visit here to this zone. And this is what happened. There was a gap up, closed like this, and as you're gonna notice, the visit actually happened just as we were expecting. Look at this, as we were expecting in the previous weekly outlook. So let's start from there, right? Let's start from the fact that we moved up as we were expecting. So now where are we today? We are literally up here. We are at a this is actually an important level because this is a not only a 4 hour, this is actually a monthly rejection level. Let's start again with the higher time frame, this for this gold analysis. And yep, I don't know if by now you noticed, but this is gold. This is a rejection level of this is where the structure of the monthly structure was rejected. But keep in mind there was a major wick going up for that rejection of almost 800 pips. Okay, so there was a major wick before we rejected this level last time. Okay, so now we are literally bouncing a little bit from this level right here. So what we could, this is 1991. So what I would be expecting, let's go to the daily. The daily remains bullish, the monthly remains bullish, the weekly remains bullish, as we can see. We are right here, which also in the weekly we can see the tap and the tap. And we started right shooting up. And if you notice the previous week, the previous weekly candle was also the same. It was literally a bullish candle, no wick below it, no wick above it, right? So that that just gives us an idea that if things continue the same way they are, this could still shoot up the same way. Now I just react to the market. I try not to predict, and if I project something, it's always based on the probabilities, right? So right now we have to react to market. So what do I mean by reacting? Let's go to the daily, and now we're gonna notice that because we are here, now we have to go to the lower time frame to see if we're gonna be rejecting from here or from here for a small time frame correction or lower time frame correction, or obviously check. We have to check for fundamentals too, especially during times like these. Actually, there's an important level. Looks like around here. Especially around times like these, because now anything that happens drives price aggressively upwards or downwards. Okay, so that's one important thing that I'm noticing, a pattern that I'm noticing here during war times. That this is my first time doing things during war times, trading during wartime. Okay, so now that we are here, we go to the lower time frame, and this is what we find. Okay, so number one important thing is this thing still hasn't been broken, right? This trend line hasn't been broken. We are at a key level, an important level. We might expect a rejection. Now, if we reject from here, I would expect that we reject down to here, number one, as part of their correction. I'm trying to figure out. Let me see if this level is correctly placed. Yeah, it looks like it. You know what? We have the level might be a little bit higher actually. So their first target might be around here, which is so let's mark it up. Let's mark this correctly around. Okay, this is 82. Okay, so at 82 would be like first TP for a potential correction if we correct this, if we have a rejection from here, and second would be actually down below here, all the way down to here. This could be those two levels could be the levels where we correct. This is 72 too. Okay, 72. So if we reject here, there's a high probability we get to here or get to here. Now, if we go to the daily, we can actually find out if this makes sense. Actually, it makes sense. Not only that, but this is a daily, which is even better. So that means that there's a high probability that if we reject here, that we get down all the way down to here to 1972, and obviously any level. Now, there's an important thing to keep in mind always as we try to find where is it that we might correct to get better entries to get buying, because keep buying, because right here is not really the best place to buy. To be honest, this would be the worst place to buy at the moment, because this is the resistance. We just rejected here on the 30-minute. We are retapping here, so if we reject again here on the structure of the 30-minute, the probabilities for this to reject are really high. So as I'm speaking, there's a high probability, for example, I mean, this is something, what I'm about to mention is something I've seen gold doing many times, which is that if we bounce from here, if this level is gonna react as a rejection for a correction, there's a high probability that by London, we have another big push that actually breaks this, this wick here and taps all the way up to here before rejecting this and dropping maybe aggressively down to here in the within Monday and Tuesdays, who knows. So that's what usually I would expect as a reaction from gold. I would expect this to create some sort of consolidation here, and maybe London gives another push, and from here the 2 a.m. around there, 2:30 ish, you see like a big wick and a rejection here. That's if like I always say, this is iffy. It's all if we reject, then there's a high probability that it would happen around that time. And then now the other thing is, we don't control what's going to happen with the war. So if things blow up during London push, then there's a high probability this is just gonna keep shooting up, and nobody's gonna stop this. I mean, this is not gonna hold. Now, that's the likelihood of this happening would be more like a sort of a normal scenario where you don't have a war going on. Okay, so just keep that in mind. Now, how low can we go before this correction, this structure break, this push up break structure? So that would be the question, right? How low can we go? At the moment, the lowest we can go before we actually break structure is down to here. Okay, so all the way down to here, to 1928, around this area, because this is the last time that price created a support on the daily. So whatever, it still could literally break below it, but as long as it doesn't close below it, we haven't broken structure. So that means that we would still keep and remain bearish. Now, the important thing to keep in mind also, when we have such a strong push up, just like this one, is that a correction could actually mean a lot of pips coming down before we even continue going up. Like if we correct all the way down to the entry, that's right there, like 600 pips, 625 pips, and we still would be still bullish. Like, and right there we still be bullish, and we could come down like all the way down to 600 and some pips. So just keep that in mind. That we have all of this range to keep a bullish long-term a bullish long-term bias, but that during the week we if we get a correction, we have all of this range to correct. Okay, it's simple. It's not really complicated. Just look at the structure. That's the simplest way. The same way we did here. Okay, I also mentioned this, that we had, like when we were here, I remember that we had, I mentioned we still have like all the way down to here, and even all the way down to here even, and that would still be a bullish bullish move, because we wouldn't have, like, we still would not break the place from where we shut up with on the daily structure. Now, looks like price was following this trend line to perfection. Actually, literally was just tapping, tapping, tapping. So there's a probability, that if it's gonna tap there, comes here, starts to do something during the next days, and we may get a retap here, and we have to just look out for a rejection from any area that is some sort of, let's say, here, confluence, that we have some sort of confluence. And if we get like all the way down to here, for example, any of these days, and we see a rejection around 1928.5, and in confluence with this, then that's a really strong entry for a buy, and we would just have to wait for a reversal, like the rejection here on any level structure, even 30-minute. Like if we grab that during a really high volume session, then even better. Now, so that's what I have for gold. Still bullish, monthly bullish, weekly bullish, daily bullish, 4-hour bullish. Everything is bullish. There's nothing that screams sells anywhere. There is a potential reversal or zone entry for me that might be about to happen. So I just I'm keeping my eye on it, because that's one of the things that I actually like to grab. But my advice, if anything, or my suggestion would be that if anybody's looking for anything here on gold, that it should be buys. Okay, it should be main mainly focus on buy entries unless you see that price starts to change. Okay, so that would be my weekly outlook for gold. So that's it. So we have all this range. Oh, and above this, I'm sorry, before I forget, if we break above, how high can we go? This is an interesting part. We can go as high like the next level where I see like a major reaction because it came down to here and closed above, and we came all the way up to here and close below. It's 2015.5, I guess, or so. So 2015.6 at this moment. And yeah, 2016.6 and all the way up to 2073, which is kind of like the very limit of this historical price is 2075. Okay, so that's, and it looks like we are ready to break in the next weeks. It would seem like we are ready to keep going above historical prices on gold. So just keep that in mind. We just have to react as we move up. So if we break above it right now, or like between today, tomorrow, or whatever, then the next target would be around 2015.6, and above this, there's a really interesting high velocity area. You know what? Actually, just since we are here, I'm noticing that I'm not gonna leave a pending order just because we are in the middle of a war. But if you notice the last stream we had, the pending order that I explained played out to perfection. So and many people was writing me in private, texting me in private that they took it, and I'm happy for them. But also, yeah, just keep in mind that the idea is not that you take anything that I say, but that you actually, like, if it is new to you, you shouldn't be taking it blindly. You should be back testing it, making sure that that it makes sense. And once then it becomes part of your playbook, then you can take it. But you just don't take it blindly just because I say it, even though if it plays out. Anyways, let's leave it there to not make it too long. And that's it. That's the gold outlook for the week. Next tomorrow I'm gonna have during the week we're gonna have 2 days in Spanish and 3 days in English for streaming. So just remember to activate the notifications so that you get it as soon as we start streaming. And that's it. I'll see you then in the next stream. I hope this helps. And if you liked this analysis, also remember to give it a like. See you next time.